In a major consolidation move in the workplace furniture space, HNI Corporation, based in Muscatine, Iowa, has agreed to acquire its longtime rival Steelcase Inc. in a cash-in stock transaction valued at approximately $2.2 billion. The agreement was officially announced on August 4th, 2025, and is anticipated to close by the end of the year, pending shareholder approvals and regulatory clearance. Under the terms, Steelcase shareholders will receive $7.20 in cash plus 0.2192 shares of HNI common stock for each share they own. Based on HNI's share price at the announcement, this sets Steelcase's valuation at roughly $18.30 per share, representing a near 80% premium over its prior closing price. On premarket trading, Steelcase stock surged by nearly 45 to 50%, while HNI shares fell as much as 25% as investors digested the accretive nature of the deal. In 2024, Steelcase generated about $3.2 billion in revenue, with net income totaling $81.1 million. Post-acquisition, the combined company is projected to deliver approximately $5.8 billion in annual revenues, with estimated run rate synergies of $120 million per year. Pro forma adjusted EBITDA is expected around $745 million, yielding a manageable net leverage of 2.1 times, which the management anticipates will normalize within 18 to 24 months. Both companies emphasize their complementary geographic footprints and dealer networks, which will enable better service across small and mid-sized businesses, corporate enterprises, and industries such as healthcare, education, and hospitality. HNI will retain its headquarters in Muscatine, while Steelcase will continue operating from Grand Rapids and maintain its established brand identity following the integration. Jeffrey Loranger, HNI's chairman, president, and chief executive officer, will lead the combined entity and remain in charge of its strategic direction. HNI's board will expand from 10 to 12 directors, including 2 independent members from Steelcase's board, maintaining continuity and insight from both legacy entities. Sarah Armbruster, CEO of Steelcase, described the transaction as a bold step, ushering in a new chapter for both organization, employees, dealer, and customers, emphasizing shared values and customer-centric cultures. Steelcase stock jumped roughly 50% within hours of the announcement, shifting into positive territory for the year and delighting shareholders thanks to the high premium offer. HNI stock declined by 25% amid concern over dilution and near-term integration costs, though analysts note the deal's long-term accretive potential and strategic rationale. Steelcase shareholders are set to collectively receive cash in new stock representing approximately 36% ownership in a combined company, while HNI shareholders will hold the remaining 64%. The transaction reflects consolidation in the office furniture industry as companies increasingly shift back to office-centric working models post-pandemic. With more organizations mandating a return to office, demand for in-office furnishings and space solutions is poised to rise again, creating growth opportunities for larger, integrated providers. HNI has positioned the transaction as aligned with its broader strategic framework, including accelerating digital transformation, enhancing dealer and customer experiences, and fueling profitable growth over time. The company's projected combination will become accretive to non-GAAP earnings by 2027, reflecting synergy realization and scale benefit. The definitive agreement is expected to close by the end of 2025, pending approvals from HNI and Steelcase shareholders, regulatory and antitrust clearances, other customary closing conditions. J.P. Morgan Securities serves as financial advisor to HNI, with Goldman Sachs and BofA Securities advising Steelcase. Legal counsel includes Davis Polk and Wardwell LLP for HNI and Skadden, ARPs for Steelcase. The acquisition of Steelcase by HNI represents one of the most consequential deals in the contract furniture space this year. By combining brand power, global networks, and complementary sector coverage, the merged entity aims to thrive in a recovering office-centric landscape. Steelcase shareholders gain immediate value and upside participation in HNI, while HNI, including its leadership hub intact, will access Steelcase's innovation legacy and scale. If successfully integrated, the move could reshape workspace solution strategy for customers across healthcare, education, hospitality, and corporate sectors, and redefine competitive dynamics across North America and beyond.